This is Bloomberg Businessweek. Insight from the reporters and editors who bring you America's most trusted business magazine, plus global business, finance, and tech news. The Bloomberg Businessweek podcast with Carol Massar and Tim Stenovec from Bloomberg Radio.
Up in the morning and out to school. The teacher is teaching the golden rule.
All right, everybody, we are going to talk about school a little bit. And now that the third quarter is officially in the books, everyone is thinking about the fourth quarter. And one of the things that could help create a bit of a reality check for the world at large, for investors, for consumers, and that is what happens when it comes to paying back those student loans.
Absolutely. I mean, there's been a real question mark among all the companies that have brought this up. But also more important, did you know graduate students are taking on an outsized share of federal student loans? In fact, even I think 47% of the total overall share of student loans went to graduate students. And our Bloomberg News higher education finance reporter, Janet Lorin, has a great story on this. So definitely read it. But first, listen to her here. She's joined us via Zoom in New York City. So Janet, your story looks specifically at graduate students who borrowed money. What did you find out?
So graduate students are borrowing a lot of money. In fact, if you look at the annual disbursements between who's borrowing, they're set to borrow more than undergraduates. And it sounds kind of crazy because there's a lot of people going to college and not as many people going to graduate school, but they're borrowing quite a lot of money. And the reason is because undergrads are limited to roughly $30,000 of federal loans over 4 years. But if you're going to graduate school, you can borrow quite a lot, up to the cost of attendance. And in some cases, you're talking $80,000 or more per year, and that also includes housing and living expenses. So that's one reason. And another reason is the interest rates. This year, if you're going to graduate school, you would be taking out a Grad Plus loan with an interest rate that's over 8% for the first time in a dozen years. And Grad Plus loans accrue during college. So, you're taking out a lot of money, and a lot more people are going to graduate school and taking these large amounts, and it's accruing. So it's roughly half of the annual disbursements, and education department economists are worried as it's set to eclipse undergraduate borrowing.
I just feel like it speaks to this bigger problem of cost of college, the loans that are taken out, and then ultimately, Janet, does it pay off in terms of the jobs they get? We've seen all the studies about get a college education, and you tend to do better when it comes to your income over time. But having said that, these graduate students who are taking on these loans, do they ultimately get jobs that make financial sense so they pay it off pretty easily?
Well, it's a great question. We know that college is viewed as a ticket to a better living, but it's just not clear about graduate degrees. First of all, it's going to depend on the type of degree and where you're going to school. If you're going to Harvard Law School or a top law school or a top MBA program or a top, engineering school, chances are you'll have a better chance of getting a job to pay it off. But we spoke to some labor economists who looked at online resumes and online job postings, and there's a lot more people with graduate degrees in their resumes. And the job listings that looked for graduate degrees were really stagnating. And the question is, what are the people who are employing you? What are they valuing? Do they want to know you have skills, or do they even care about a graduate degree?
Well, and
of course, if you want to.
Yeah.
Oh, go ahead.
No, I was thinking about my own career. It's like at one point I said to somebody, should I go back and get a graduate degree? And I knew I was already doing journalism. And she's like, you're doing it. That's the best experience.
I had a similar experience. I don't know if Janet.
Did you get a graduate degree?
No, I didn't. Ultimately thought about it, decided not to do it. But Janet, I don't know if you've had the same experience.
Well, I did, but I went right out of college. It was a lot less expensive then.
Well, and that's something your story says, too, is that the costs for these degrees have gone way, way up. And so you have people not necessarily earning as much money in their overall careers, but then they're also having to pay off these bills that just seem to be wildly more expensive, right?
Yeah, I mean, if you want to go to graduate school, find someone else to pay for it. If your parents are able to pay for it, if your employer is able to pay for it, if you can go to a state program that doesn't cost a lot of money, then then in some ways it could be an easy decision. But you have to do this calculus. And some of the borrowers we spoke to in the story, they just weren't sure what to do after college, and they thought that these degrees would give them higher earnings, and it just doesn't always happen that way.
Gosh, you talk about Brielle in your story, who went to Eckerd College in 2012. Anyway, she went off to get a law degree. I mean, you note, Janet, that she says it's going to take until 2045 to pay off her loan. She got a law degree, right? And she expects it to grow to about $245,000 with interest. I mean, that's some serious money.
Yeah, and she found a job with a law firm that she really enjoys. But as it turns out, it doesn't require a law degree. It's working in compliance, which was something she would not have found otherwise if she hadn't gone to law school. But it's just the calculus, and in some cases the risk that people are taking because they thought it would pay off, and it doesn't always pay off.
While we have you, can we talk about another story you wrote? The school that is so steeped in wealth and prestige has also been steeped in scandal and now searching for a new president. The area in which it resides in which it's so connected, the U.S. tech epicenter, also going through a reboot that will no doubt impact Stanford as well. Talk to me about the standing of this institution in our world at large and how that might change given all these factors.
Well, Stanford is going to be just fine. They're going to,
okay. All right, we're done.
They're going to get a good president. Tens of thousands of kids are still clamoring to go there, but they've had to deal with a lot of scandals. Frankly, their president resigned. There were a lot of questions in his research. He's a really prominent scientist, and he actually had to retract a couple of articles, which is a pretty big deal in the scientific community. And this was all discovered in the student newspaper, which is really impressive. And a lot of the big scandals in tech are, the Stanford name is dragged into it. FTX, the crypto exchange, that's Sam Bankman-Fried is going on trial next week. His parents are law schools there. And our Bloomberg colleagues had a great story a few weeks ago about their involvement. Of course, Theranos, Stanford dropout, had a big tie to Silicon Valley. And there's just a lot of stuff going on there. So, we'll see. But Stanford raises more money in some years than Harvard. They get more, government research funding than schools that are hundreds of years older than them. In one sense, 4 Nobel Prizes in the last couple of years, raising $1 billion. But on the other hand, there's a lot going on there.
Yeah, I love Stanford's fundraising alone over the last 6 fiscal years exceeded $7 billion. Pretty serious money. And I have to say, when Bloomberg Businessweek does the annual MBA survey, it is often number one.
And I think was this year ranking as well, yes.
It's consistently number one. So it's kind of where students want to go, and they seem to like it a lot. Janet Lorin, thank you so much. Have a good and safe weekend. Higher education finance reporter at Bloomberg News, joining us on Zoom from New York City. I'm Carol Massar, along with Simone Foxman, in for Tim Stenovec. You're listening and watching Bloomberg Radio.
You're listening to the Bloomberg Businessweek podcast. Catch us live weekday afternoons from 3 to 6 Eastern. Listen on Bloomberg.com, the iHeartRadio app, and the Bloomberg Business app. Or watch us live on YouTube.
When it comes to news flow, there's a lot when it comes to anything and everything to do with AI. The European Union, in fact, checking out and examining alleged anti-competitive abuses in chips used for AI. It's a market that we know is dominated by NVIDIA. Even so, maybe some concerns. We'll see where that goes. It may go nowhere. The world does seem to be all in when it comes to artificial intelligence. And our next guest works with companies to better use data and AI efficiency, yes, but also to help companies become more sustainable. So let's get to it. Our guest is Christina Shim. She is Global Head of Product and Strategy at IBM Sustainability Software. She is with us on Zoom in Atlanta. Christina, good to have you here with us. Tell us a little bit about what you guys are doing when it comes to AI and helping companies to be more sustainable.
Absolutely. Thanks for having me.
Yeah.
So look, sustainability is one of those things that is not going away. If anything, it's becoming more and more of an issue. We're seeing it affect everyone from communities to businesses to governments and regulations coming out. You're seeing it with extreme weather. You're seeing that in New York today with the flooding and the rain that's happening. And this past summer was the hottest in recorded history. And so what we are doing is ensuring that we can work with our partners to make sure that they are headed towards and leveraging technology in reaching their sustainability goals. More than 2/3 of employees want to now work for companies that have sustainability goals committed towards.
But what does that mean?
77%.
So what does that mean when you are helping them? Like what specifically? Give us an idea if you would, an example.
Yeah, absolutely. So look, the biggest challenge here is data. Basically, organizations have a really difficult time working through multiple different silos. I'm talking hundreds of different systems and spreadsheets all around the organizations to really get a sense for where the baseline is for their sustainability posture. So if you have hundreds of different systems where you have data, you can't necessarily make sense of it in one single system of record. It's really difficult for organizations to understand where they are, where they need to go, and how to get there. And so while organizations have these committed sustainability targets, they also have to think about it as core to the business. This is not just good for good's sake. It's also good for business. And so what AI helps to do is to unlock the potential of all of that data. One is, how do you make sure that you are bringing all of that data into that single system of record so that you can understand where you are, where you need to go, and how to get there. And the how to get there is, what are the insights that you are able to draw from the data so that you can actually action on it. Right now, there's not a lot of time. I want to say not a lot of time left. We have to act very quickly and urgently around climate and towards sustainability for businesses and for communities. And unlocking the potential of all of that data through AI is where this is all going. And that's what we do with our partners and our customers to help enable that.
Okay, but this doesn't sound that sexy to some degree. Like this sounds like data management, data crunching. What about this is like artificial intelligence?
Yeah, so AI really helps to, it's not, I joke that it's really the non-sexy stuff, but that's really what helps us to get towards the action that's needed. So AI enables better and faster decisions on both the sustainability and on the business front. It helps across a couple areas, right? So you mentioned the efficiencies. Yes, it helps with energy costs. It helps with emissions. It can help to do a couple things like monitor and maintain physical assets around your infrastructure, around your factories, things like that. It can optimize how inventory is routed around the world. It can detect anomalies that drive zero defect goals.
Right.
It can write cloud computing. It can schedule tasks. So yeah, these are not really sexy things to do. But at the end of the day, this is what really helps to make a difference in actioning what net zero commitment or what goals organizations have set.
Christina, help us though, because AI, not a new thing, been around for decades, right? Artificial intelligence. And so we always kind of remind everybody, but the world has become, so excited with generative AI and how that takes us maybe to a different level in terms of data management and usefulness. So what has changed in terms of, you guys have been working with AI for a long time, no doubt about it. Has something changed though in your ability to help customers when it comes to maintaining their sustainability targets or monitoring of those targets?
Yeah, so that's a great question. One is that increasingly customers are more inclined to think about how generative AI can actually help them with their business and sustainability problems. There's much more appetite for customers to inherently and intentionally use AI for these problems. Two is that it can help make the automation and reporting of data and decreasing of emissions much faster. And increasingly, I would say, especially in the last few years, even before generative AI became the hot topic or the trendy topic, customers were already starting to think about it because regulations and compliance were coming out.
Right.
But this has really catapulted and accelerated, I would say, in the last year or so. You're seeing regulations come out in the EU, increasingly in the US. You saw what happened this past month in California with their emissions law. And so using foundation models and using AI can actually help to solve these problems faster, but also appetite from the customer side has changed quite a bit. And so I think a combination of how we are addressing AI as part of what we're doing, and increasing kind of the acceleration of that using foundation models with existing products and new products.
Does
and
you
then
know
on
what
the
I
flip
wonder?
side-
Does it move the needle for you guys at IBM financially? I mean, has generative AI, and then when it comes to sustainability needs of customers, does that create a significant new revenue stream for you guys? And we just got about 30 seconds.
Yeah, I will say that there's a real hunger for this, right? There's a real appetite, there's a real hunger for this, and customers know that this is a game changer. So they will do that. They will inherently look to adopt this technology in a way that they know has meaning in both their business and sustainability. And they know that we are working with them to ensure that we're doing this in an unbiased and a transparent way, because I know that there are some areas of AI that we need to make sure that we're doing in the right way.
Right.
And so the customers that are most forward-leaning and really interested in this, which I would say all the customers that we're talking to are so, they're making sure that they're integrating that as part of it with that increased appetite and intentionality. And I think that is where the market is and where the appetite is for sure.
All right. Appreciate that. Some context. Christina Shim, Global Head of Product and Strategy at IBM Sustainability Software, joining us in Zoom in Atlanta. I always feel like time will tell. I kind of like chatbots, but we'll see.
But it would be good if people wanted to save the environment, because AI is cool.
All in on that. This is Bloomberg.
You're listening to the Bloomberg Businessweek podcast. Catch us live weekday afternoons from 3 to 6 Eastern on Bloomberg Radio, the Bloomberg Business app, and YouTube. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
All right, everybody, the public, you, me, everyone, remains largely in the dark about a process in the making of plastic. It is known as fluorination, and the toxic PFAs that are generated in the process. Those PFAs, compounds found to be so dangerous that the U.S. Environmental Protection Agency had moved to effectively ban them back in 2015. There is one company, little known, that seems to be at the center of it. Got to get to this story. It is a feature in the new issue of Bloomberg Businessweek on newsstands, online at Bloomberg.com/Businessweek, and on the Bloomberg. With us to talk about it is Bloomberg News reporter Esmé Deprez, and also the editor of Bloomberg Businessweek, Joel Weber, on Zoom in New York City. Joel, I feel like you just keep bringing to me and to our audience stories about things that make me a little worried, whether it's the Google search abilities and location abilities, or whether it's plastics, and how is that maybe impacting me?
Yeah, so Esmé's reporting on this story is sensational, and it will really terrify everyone. And I've spent the past few weeks since reading the first version of the story, like going through my life and just basically like flipping over every plastic bottle and container and looking for a number 2 symbol. Esmé, why is number 2 a problem?
Yeah, well, big picture. I mean, this story is about PFAS, which are these enormous, this enormous class of man-made chemicals that have been used for decades to make all kinds of things, better. But scientists are increasingly ringing alarm bells about them as we learn how toxic they are and the ways in which they harm our bodies and the environment. So this story really is about the scientific discovery of a new route of exposure to PFAS, and how there's just one company, Carol, as you said, in the U.S. that's responsible for making them, or for generating these illegal toxic compounds, and how, despite demands from the U.S. government and the Department of Justice, EPA, the company has just flat out refused to stop. And that number 2 symbol is really important, because that's the type of plastic that this company typically treats. It's called HDPE plastic. It's rigid. It's usually opaque. It's used for everything from milk jugs to snowboards, and that's typically the plastic that they're treating. And as a result, generating PFAS, and some of the worst PFAS at that.
So Esmé, so much of your reporting is terrifying, but how big is this company? Who owns it? Why hasn't the EPA just managed to shut it down if all this stuff is so troubling?
Yeah, that's a great question. So Enhanced Technologies is actually a really small company. I got a hold of some documents from 2018. It showed they just had $46 million in annual revenue in 2018. So obviously that's not a ton. They only have a few hundred employees, but they've really built up this domestic monopoly on this process called post-mold fluorination, which is this treatment of plastic to make it stronger. And like this treatment is actually really useful. Plenty of companies have wanted this treatment for decades because it makes plastic less permeable. So you can transport, harsh chemicals and solvents and things like essential oils. The reason for fluorination is that conventional plastic will permeate through the container walls if you don't provide a barrier of some sort. So that's the reason why they're fluorinating their plastic. That's why they're treating this plastic in this way.
Right.
And so the EPA has gone after them, and so has the Justice Department. They have essentially they're in violation of a really wonky chemical law, and basically they say this law doesn't apply to us, and so we're just going to continue, going on business as usual. Obviously, as they fight this, this battle with the EPA, and now they fight this litigation in federal court.
So the litigation obviously makes this incredibly timely. Is there any sense of what the outcome of this looks like for the timeline? And also, what about the health implications and the economic implications of whatever the outcome becomes?
Yeah, so the litigation is ongoing. So Enhanced kind of is fighting two battles. They're fighting one battle against the EPA itself to try to get official clearance to continue fluorinating. There is a process for if you're generating these quote-unquote long-chain PFAS compounds, which are kind of the worst of the worst. You can apply. There is an effective ban on them, but you can apply to the EPA to kind of get an exemption. So that's what they are trying to get. So they're kind of fighting that battle on one hand, and then they're fighting this other battle on their other hand against the DOJ in court and saying, we're not, they're trying to convince a judge that the law that the EPA says they're breaking, that the DOJ says they're breaking, that they are exempt from it. So they have two main arguments. One, again, it gets a little wonky, but they say, the EPA only has the authority to regulate significant new uses of these chemicals, and they've been doing this for 40 years, so they're not, that doesn't qualify as new in their mind. And then, so that's kind of their main argument. They're also saying that, that the quantities of these chemicals that they're generating are so small, and they are quote unquote impurities, so they don't, qualify for the law.
I keep wondering, wait, my government, I pay taxes, who's watching out for me? But having said that, sorry, I'll get off my soapbox. Esmé, you are Bloomberg News senior investigations reporter. In your investigations, I'm thinking of people who are listening and watching to this, and I'm just curious, size and scope. So how widespread is the use? Joel talked about going through his containers. I'm wondering, I turn something upside down, I see that recycle or whatever that code is, and I think, oh, I'm good. So give us some size and scope in terms of the types of containers and the different industries that are using it, and how, is it likely on all of our shelves?
Yeah, so it's quite hard to say for sure because Enhance is owned by a private equity firm. Going back to your question, Joel, sorry I didn't answer that. So they're owned by a private equity firm. It's a private company. They don't have to publicly disclose their customers. And the EPA has a list of their customers and what the fluorinated plastics are used for, but they call it confidential business information. So when we asked for it, they said no. But basically, Enhance says they fluorinate more than 200 million plastic items every year. A lot of those containers are used in the agricultural chemical industry, so for things like pesticides and other harsh chemicals. But our investigation found that these items that they fluorinate touch virtually every facet of the U.S. economy. They're used to hold weed killers, gasoline, household cleaners, cosmetics, shampoo. We actually had some independent testing done on 2 shampoo bottles of companies, Bumble and Bumble and OGX Beauty, that I had reason to believe might be fluorinated, and indeed the results came back positive. So it's shampoo, it's body wash, so lots of things. Enhance says, so when you're at home kind of going through your shelves and, figuring out whether you may have fluorinated plastic, you want to look for, again, that number 2 symbol that is the recycling code for HDPE. And then you want to go to the ingredient list. You want to look and see, does it have essential oils, pine oil, citrus oils? There's a really widely used citrus derivative called D-limonene, and that's in a ton of, soaps, and it's in a ton of stuff. So you might want to, look there. I was also able to find the names of some companies that Enhance has named as end users of the company's treated plastics, and those included Bath and Body Works, Bayer, BMW, Estee Lauder, Husqvarna, and L'Oreal. So we're talking really, really wide penetration. This goes way, way farther than mosquito spray, which is the initial product that that was what led to the whole discovery, was mosquito spray.
Esmé, so what are the health implications of this? What happens if these PFAS, get in your bloodstream? Like, where does this go if you were affected by it?
Yeah, so for all that we know today about the PFAS universe, it is really important to say, like, there is so much more that we don't yet know, so much more that we have yet to learn and to discover. However, we do know that PFAS are really good at getting into our bodies and sticking around. So it's not like, even like caffeine or even lead. I mean, your body, gradually gets rid of those things. PFAS, they're really good at sticking around in our blood. They're really good at sticking around in the environment. They're really good at sticking around in water. And it's really hard to get them out. So, we now have enough long-term data to link PFAS exposure to really bad things like cancer, birth defects, infertility. Now, we're talking a really, really big class of chemicals. We don't have the data to show that all PFAS cause those things, but the data that we do have is very disconcerting. And certainly for these long-chain PFAS, which is the specific subclass of PFAS that fluorination of plastic generates, those are definitely the worst of the worst, and they are the ones that are, the data is showing a most strong correlation with things like cancer.
And of course, I think one of the most other frightening, troubling problems that the Esmé's reporting reveals is if the EPA is successful and this company disappears from the market,
right.
The implications for all these companies and how we deal with consumer products in general is also going to be a big problem. It's like, there's so much plastic in the world, and here we are having to figure out perhaps a health implication we hadn't ever anticipated.
A great investigative piece. Bloomberg News senior investigations reporter Esmé Deprez, and of course the editor of Bloomberg Businessweek, Joel Weber. Check it out. It's in the current issue. This is Bloomberg.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no.
Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
It's the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, everybody, just about 18 minutes left to go in the Friday trading session. Simone, we're getting ready to wrap up the day, the week, and actually the third quarter.
And it's looking like a negative end for the S&P 500 and the Dow Jones. So not necessarily optimism on this rainy Friday, at least here in New York.
No, it's been a wacky third quarter, to be quite honest. So let's get to it. Michael Sheldon is back with us, Executive Director and Chief Investment Officer of Hightower RDM Financial Group. He is back with us on Zoom in Westport, Connecticut. Michael, how are you?
Fine, thanks. Trying to stay dry up here. It's probably pouring in the city also.
It's crazy, and we're all just, trying to figure out how we're going to ultimately get home. But we'll get through it. We'll get through it just like we'll get through this year, this market environment. It was an interesting day where I think there was some relief coming off of the core PCE number. We know that's an important read for the U.S. Central Bank. And then we had the New York Fed president come out and talking and reminding us about higher for longer. And I think now I almost feel like, and Michael McKee pointed out this idea of, I guess we're trying to figure out what higher for longer ultimately means. Longer, is it a couple of months, 6 months, a year? How do you see it?
Well, I think sort of first looking at the markets, I think September has lived up to its reputation as being a difficult month for the markets. And we had a pretty good first few months of the year, but things have sort of tailed off here recently. In terms of Fed policy, we've had 5.25 percentage points of rate increases over the past year and a half. And one of the things we wonder about is how much of that is really truly filtered into the overall economy. So one thing that's important for investors to remember is we are towards the tail end of this aggressive rate hiking cycle. And I'm not sure if we're going to get one more rate hike or not. That's a possibility. By the way, the government shutdown could basically delay some of the important economic data that the Fed needs. So that's something to keep an eye on. But I think we could get one more rate hike and then the Fed will probably go on hold. I will tell you that historically, at least, looking at the past 13 rate hiking cycles, once the Fed has stopped raising rates, they've actually started cutting rates on average about 8 months later. So if the last rate hike was in September, that means the first rate cut would be in May of next year, although this is anything but a normal cycle.
Yeah, so then if they hike once more, we're looking at maybe July, middle of next year. I mean, the question I have for you, though, is the one you raised. Do you think that all of this aggressive tightening has really played into what we're seeing among consumers, among corporate behavior, or do you think there's more that we just haven't seen yet?
Yeah, that's a tough call. I mean, coming into this year, the consensus opinion, and there was every reason to think that we were going to be headed for a downturn in the economy somewhere in the middle of the year. And a lot of those economic statistics, whether you look at the yield curve, the leading economic index, the Fed senior loan survey, those sort of indicators still point to some period of weakness. But the economy has been incredibly resilient and really on the heels of the US consumer. We have seen some pockets of weakness in areas like housing and manufacturing. And those are certainly areas to watch. I think in terms of the consumer, that's still really the linchpin right now. You know, if you look at the monthly numbers, and we'll get out the jobs numbers next Friday, they have been slowing, but the weekly jobless claims are close to the lowest levels we've seen in some time. So it is a mixed picture, and I think we need to keep an eye on the consumer.
I think Simone brings up a really good point. Like, we talked so long coming off the pandemic about all the labor hoarding that was going on because employers, were so concerned about being able to find the workers they needed because it was such a tight labor market. Do you think corporations are in that same situation, that they'll hold on to workers a little bit more if they're not quite sure which way we are going to go, rather than quickly make the moves to make sure that their balance sheets look good to investors?
Yeah, I think you're going to see some of that. In terms of the job market, if you look at the JOLTS data, which comes out, that's the job opening and labor turnover numbers. Those come out next Tuesday. So that'll also give us some additional sense on the sort of availability of workers and labor.
Do you trust? Wait, let me just break in for a sec, because we had a great Bloomberg story on the terminal about ghosting, like ghosting in terms of job postings, where people would apply for listings and then like kind of never hear anything, or they'd go away. And so it kind of feeds into, Michael, the idea that, do we trust the labor data that we're seeing from the government? You know that there's been some debate about, is it really painting an accurate picture? So go ahead, continue on.
That's a good point. About a year ago or a year and a half ago, I did read a report that was put out by the BLS. So there was a lot of talk about with the demand for workers so strong, which is really unprecedented in the last 20 years or so. But remember, the JOLTS data only goes back to about 2000, so we don't have a multi-decade track record for this. But there was a report, I believe, that the BLS put out saying that they believed the data they were providing was accurate, meaning there was a strong demand for workers that wasn't being filled. So I think we can only go by that. I mean, there are a lot of anecdotal reports out there as well, which we need to watch. There are other things. The supply chain issues are improving. We see prices coming down. For example, the core PCE today came down at 3.9%, which is the lowest since 2020. So parts of the economy are softening up, which seems only likely that the demand for workers should slow somewhat compared to what we've seen over the past couple of years coming out of the pandemic.
Do you think that companies have done enough to prepare for this would-be recession or downturn, that even if we get sort of the official definition of a recession, that they're prepared and that the earnings recession is potentially over?
Well, that's a good question. I think you did see some of, about 6 months to a year ago, you did see especially some of the larger technology companies start to take the initiative and downsize. They had probably hired too aggressively coming out of COVID, and they started to downsize some of their hirings, and that's helped profitability. So margins will certainly be important to watch. In terms of the markets, I think one of the most important things going forward is earnings this year are currently forecast to be flattish, but looking ahead to 2024 and 25, corporate profits are currently forecast to jump double digits. So we do have some important headwinds right now from higher interest rates, the dollar, and oil prices. But I would keep a close eye on corporate profits, because stocks tend to follow the direction of profits, at least over time.
I think I agree with you. That's a fundamental that really will drive potentially investor decisions. Having said that, B of A, Michael, out with their latest when it comes to global investment flows. Global equities had inflows driven by U.S. stocks, while all other asset classes suffered outflows. This is for the week ending 2 September 27th, again from B of A. And this also included the first withdrawals for bonds in 27 weeks. Just 30 seconds. What's your investment thesis here and play?
Well, I think on the fixed income side, If you haven't already extended your duration, you want to start thinking about that because interest rates are the highest level in several years. Money market rates tend to follow the direction of the Fed funds rate. So ultimately, when the Fed cuts rates down the road, you want to start adding some duration to your portfolios to lock in these higher yields. And that's an important part of your portfolio that goes along with stocks over time.
All right, but you're not ruling out stocks. 10 seconds.
No, I think we're sort of in a range-bound market right now, probably 42 to 4,300 on the low side.
Okay.
While we have some headwinds right now, keep
it.
an eye on the Fed. The Fed is towards the end of its rate cycle.
Right.
Interest rate will ultimately peak and inflation is coming down.
All right, have a dry and safe weekend. Michael Sheldon, Executive Director, Chief Investment Officer at Hightower RDM Financial Group, on Zoom in Westport, Connecticut.
This is the Bloomberg Businessweek podcast, available on Apple, Spotify, and anywhere else you get your podcasts. Listen live weekday afternoons from 3 to 6 Eastern on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.